Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, 21st of June, 2023, 5:55 p.m., first day of summer. And I'll tell you, it is a dry summer in the states that have the three I's. You know what those are? Illinois, Iowa, Indiana. And if you watch the grain markets, you're seeing a rip to the upside, and that all has to do with dry weather. Got to know how to play these markets. Inevitably in June, markets go into the weather scenario. You rally like this, you often make your high. You heard me, the high, off this march to higher prices. We'll see if that's the case this year. And that happens when you get to extremes, and we are certainly in an extreme. Another event happened today that I just want to share with you because it pays attention in gold and everything we're going to talk about. I had a client in the grains writing me this morning, and he's going, oh my God, November beans, not the lead month, the back month, has 5 days or 6 days in a row over the Bollinger Band. The key is what is the lead month doing, not the far back months. And don't get me wrong, November beans has excellent volume, and in fact, a lot of people are now just going to trade that. The second part he didn't bring up to me, and of course they never do, clients, is the market's over and been over the 18-day average of closes. When you're over that, like we're going to talk in gold, if you're over the 18-week or under the 18-week or over the 18-day or under it, that is your filter. The filter being you should have an upside bias over it, a downside bias the other way. So if I get sell signals, but I have an upside bias because I'm over that, I don't take those sell signals over the 18. You might. It's not what I would teach. And it's year after year, my whole trading career, done a wonderful job of keeping me in the game. And people, it's the simplest thing, but you won't do it because you don't want to do the simple. You want to pick a top and you want to pick a bottom. I'm just picking on beans because it's the market that is moving. Now, what moved today were certainly the stock indices. And I'll talk about that on the financial update right after this one. In the metal markets, what's the headwind right now? You know what it is? The headwind is that the Fed keeps saying that they're going to get inflation down to 2%. And each time the Fed chair comes on, he talks about there's going to be more rate hikes. He said it today. But at the same time, he will say they're going to be data dependent. They're not going to forward look. So they're not giving you forward guidance. They're going to stay month by month. What I didn't get, and I still don't, is the logic of the pause. And I listened to it. And his logic was this. We started off with 75-point hikes. We moved to 50. We dropped to 25, and now we want to see the impact. Why? You see it all the time. You just saw core CPI. It came out. It isn't working. Okay? You're still over 5%. It isn't working. What are we standing and looking at? You think tomorrow it's going to come in at 4.7 next month? What are you holding off on? That's what I didn't get. And I don't think that a lot of the congressmen bought his argument with that either because the inflation is high. I was watching the congressman, my district that I represent, between food costs and shelter costs. No matter what they get there in their wage gain, they're behind, they're doing it. And he's sitting there looking to see his work. Well, Mr. Chair, you're not an artist. You're not Leonardo. You don't have to stand back and go, I'm going to come back and look at it in a week. You're seeing that on each data report. And he was asked, did you see this data report? Did you see that one that just came out? Did you see the Bank of England, the inflation that's running away there? And his answers were yes. So we know he sees all this. There's no question he does. These guys are very bright. I just didn't agree. I've really agreed with just about everything they did. You know, I know the people that beat up and you waited too long. And I get it. The Fed, and one of the Congress people did say, you know, you guys never get it right. You always put us into this problem or that. And he answered that question well. Trying to look at that tanker way out there and all the crosswinds and all that's coming in, you do your best, but you probably are going to miss your goal. So the question is how bad a miss. In other words, if we get a recession, don't make it a deep one. Got what I'm saying? So that's basically where I think you're at. When you look at the gold market for the first time, we have a chance now to be underneath at the end of the week, the 18-week average. That means until it pops back over 1957 on a closing basis, I am what part of this market? I am in looking now for still downside, not upside action. When we look at the August gold chart, I think it's pretty easy to see. You're in a downtrend. You don't need me to show you that. Once the market started taking out this low again and that one, I really think this was the low right here that was the key, not to take that out again. And when you did, the rallies are just failing away. Where did the market go to and run the battle? Remember that 18-day average? Have you not been under it? So why would you look to be long? And that's the basics that you do. Go back to Charting 101. Take my course on my website. Really learn the basics. From there, you build. We're building right now a technique that I eventually want to bring out to my subscribers and so on, be another service. My developers, though, one of them goes, we haven't even finished the buy side of this, not the results. Says, well, I'm going to move on to the sell side. And I admonished him today. And I said, why? We have so much to finish on the buy side. Does this thing even work? If so, what are the risks? What are the returns? I mean, we're running the early sampling and we're very excited. That doesn't mean anything. You don't go from A to Z. You go from A to C, C to F, F to L, whatever it is. You do it in stages so that your work makes sense. I have been there before where you go, oh, this is really good. I'm going to throw some money into it. You inevitably lose. You got to learn the right things with it. You're not looking for perfection. You're looking for things that work in a big amount of the time. And how do you handle the risks when it doesn't work? And then you get yourself something you can believe in. That's what I try to do. One of those things are slow stochastics. So when you come down to a slow stochastic, I don't care if the market goes lower. The trade is most of the time going to look at that number and you're going to get a bounce away from it. So if you're bearish, you're not looking to sell there. You're trying, if you're still bearish, to come in here. If you're under the 18-day average, the swing line's down, you're not selling a lower under the band. You're trying to sell the rallies up to the 18-day average if your momentum is tied with you. Now, what the momentum has just done on the chart has gotten oversold. I'll walk you back one more day. Today's Wednesday. You weren't oversold here. So the rally back up here to that 18 and 100-day average was the resistance. The stop would have been over that high. The objective on the trade, if you came down, was right here yesterday. The Bollinger Band. And I know what you're going to tell me. Well, Ira, take a look at today. Take a look at today. The market went lower. I don't care. Truly don't care. That's not where the high percentage money was if you were playing that type of trade. And that's what it's about. When I put out my trade recs for my subscribers, I get plenty of losers. I'm trying to make them small. I was wrong today in the S&P. My risk on the micro mini contract was, I thought it was no more than $100 a contract. I thought it was going to be less, and the potential was probably 3-4 times that amount. I was wrong for $85. I can live with that. You lost the embedded reading. We'll talk about it when we get there. But that's what you want to do. Do some trades get away from you? Absolutely. Do most? No. And that's how you got to start working with what you do. So, the gold, silver, this market flipped on you. What happened? Whoa, tell me right here. Let's go back a little. This is Tuesday, the 20th. Right here, you're fine. This week, you have to be out of your position of long silver, short gold. Why? You've changed the bias of the market completely. If the market's going to go, you're just going to get hurt at this point in time because it changed on you. It has to close back under that for silver to be stronger than gold. You'll see what I'm saying on the next chart. But let's finish that up and look at how the market did a tear to the upside. Now tell me what silver did, because silver should be dropping on that news like a rock. More than the gold. Now, I think silver's down to an interesting spot. You're back to the first challenge of the 200-day average in the Bollinger Band. The market's had its breakdown. I'm not saying it can't go further down. I'm saying the high percentage traders are gone. Could put out of this. Why? You're oversold. You're at these key numbers. That's what I'm saying. The gravy to catch the rest of the way, unless you embed, and we've discussed that you get the pattern that looks like this. No, I'm not interested. In the copper, I'm eating my heart out. There was a way to come in today to copper, and I put it in my written update. And China last night did another move to spur the economy. It has to do with electric vehicles. And it kicked the market up to a number where I couldn't come in on the break. I was trying to come in on the break today, and the number was hit, but it first made that higher high, and then it went. It happens. Why am I trying to be a buyer? I have an embedded reading for my clients. So I'm making bias recommendations to the upside, trying to buy on the pullback. But there's a way to work on the course, the embedded course, that says if this one event happens, you do not take that buy signal and that event happened. I don't care if it goes higher. More times than not, I have proven, going back on the computer studies, that saves you on a trade that can go bad. I'm just looking for the percentage trades that can help. Putting them all together doesn't mean you're a winner. I don't want to be a big loser. Does that make sense for my clients? That's the whole thing. In the platinum, lower high, and by the way, I don't manage anyone's money. So I'm telling them what to do. The last thing I'll do is manage money. I used to do that. My whole day was spent on the phone explaining drawdowns. I got no calls if you'd make a lot of money for them. Soon as that happened, you don't have time to make the money back. The phones are ringing. That's human nature. You know that. Lower highs, lower lows. No, I wouldn't tell a client to sell there, but I'm so happy. I analyzed for you what I thought the problem was going to be and why platinum would sink here. I said, if there's too many electric cars coming, each one that's built doesn't need a catalytic converter. And the way this is going, the auto manufacturers are building more of the very expensive cars, not a lot of cheap cars. In other words, more volume, cheaper cars. They're not doing that. They're going the other way. I think that's what's hurting the market to a degree. As for the dollar, I'm still bearish. I keep hearing all these people are bullish. How could I be bullish? The Fed's going to keep raising interest rates. They're going to 2%. They're going to contract the economy. That's their goal. And people are telling me to be bullish. Fundamentally, it doesn't sound right. Forget the fundamentals, because that's not what I think trading is about. You have a pattern of lower highs, including that, lower lows. My question on this bounce coming up was the 100-day average going to offer any support or not? It did not. It's become a resistance point in the near term. Is the market embedding? Let's take a look. Both numbers. Embedded, day one. Embedded the day before. Embedded the day before. You're embedded. So that means to me that per what I teach in the enhanced Bollinger Band course, the market's a sale on rallies. But remember, there's a caveat. I mentioned to you in copper what it was. I won't give you the signal. Take the course. It's on our website. It's simple. I think it's 15 chapters. You will pick up on it like this. You'll knock it off on a Saturday afternoon and you'll go, whoa, let me go look at charts and see what this presents. And you're going to understand what I keep talking about. IRApstein.com, the Bollinger Bands, that's where you want to go. But for these markets to understand what is going on, you need somebody writing and saying, hey, look at what's going on. If you have no experience in the grains or you don't understand what's going on in energies, the EPA made a change in degradables, biodegradables, and it put soybean oil limit down today. While other grains are soaring, it's limit down. What does it mean? Why did that happen? If you don't get all this, understand the fundamentals. Go back to the charts. What I love to do is take the name off the chart. But I certainly pay attention and I understand the fundamentals and what they're doing. So to get this, we give you 2 weeks free, no credit cards, none of that. All you have to do is go to our website, IRApstein.com, under free offers, and there's plenty of other free offers. There's my research, there's our charting software, there's an awful lot there. You can also take your cursor, move it up here, give it a click, and away you go. I'm Ira. You have a great day. I'll see you in the financial market and the Spider ETF updates in a bit here. See you in the morning as well when they do the morning flash update. Remember, Bank of England, their rate decision is tomorrow. Take care.